We're looking at S&P 500 M&A futures. Time frame is 2000 tick chart. And as a price action trader, I need to correctly analyze the pre-market session before I start trading, because pre-market session can give me enough information about the structure that I can use this information in the future later on. Now I can see that the structure is a trading range. Price gapped up, created uptrend, push down, push up, push down, push up. Exponential moving average is flat and price is swinging up and down, up and down. This is a clear trading range structure. Now, according to trading range rules, we know that price acts that it bounces between the extremes, which means I have to buy low and I have to sell high, which means I have to identify the key levels because I want to know where the low is and where the high is. So I'm going to use the support line somewhere around these lows, and I'm going to use resistance somewhere around these highs. I'm not going to put it at the very high or at the very low of the move because I want to make it look reasonable. I don't want to make the extremes too far from each other because I want to have enough touches so I have the confirmation. At the same time, I cannot make it too tight because that would produce already a lot of failed breakouts, and I need to make sure I want to catch the proper failed breakout. I don't want to catch multiple failed breakouts because that's not really how price action works. If you make it too tight, you don't get the clear confirmation. So I'm going to use it reasonably so I have enough touches that it's not too tight, but at the same time, it's not too far apart. You guys can see in trading ranges, we are going to be drawing the short-term trend lines. There's uptrend working higher, break, new extreme form, second leg to new extreme, and price reversed. Downtrend working lower, break new low, and price reverse higher, break new high, and price is reversing. You guys can see price action is following trend line rule in trading ranges perfectly. After break of a trend line, new extreme is going to be retested, and after that, we expect correction or possible reversal. Now there can be a temptation to draw a channel like this, and it fits pretty good. You guys can see you have 3 confirmations at the lows, but since this is a range structure and we just came off the overnight session, I'm just going to be sticking mainly to the short-term channels because these channels are the most reliable in ranges. Now price consolidated for a little bit. You guys can see EMA got flat again, price formed a double bottom, we formed a double top, and it's just a smaller trading range. So market opened somewhere around this area. And when I'm watching this, I'm leaning towards a bearish bias because price is coming from the resistance and it's heading all the way down here. But here I have 2 conflicting patterns because I have a series of lower highs and lower lows consistently pushing lower. But at the same time, price broke below this small little trading range and most breakouts will fail, at least temporarily. You guys can see price broke lower and pull back into trading range before eventually working lower. So when I have 2 conflicting beliefs like this, I don't want to do anything because I don't want to gamble, so I just sit back and let the price action unfold in front of me. Price created, first leg down, correction, and another leg down. So it is confirming the bearish bias, push strongly above EMA and push back below EMA again. At this point on, I have enough information from the market that I can safely identify what is the pattern. You guys can see this trend line is really fitting perfectly. Price is neatly inside this channel. I have multiple confirmations at the top and I have multiple confirmations at the bottom. So now that I know that we're coming from the highs and we're heading all the way down to low, according to trading range rules, you want to buy low, sell high. We're on our way down. This is a bearish downtrend structure and a high probability setup is a 2-legged pullback at the key entry point. And this is the lowest low where you have to reset the count. When you're watching market here, price created the first entry short, pushed higher. There's a 1 micro little tick at the EMA. It's almost not visible, but it's there. 1 little tick higher and a second entry short lower. This was my first trade for the day because it is a 2-legged pullback at the key entry point at the exponential moving average on the right context on the bearish downtrend. And price created move down, pull back, another move down. Now notice we have a little overshoot. An overshoot a lot of times lead to a break of a trend line or possibly straight up reversal. Once price pushed strongly above EMA, 5 consecutive bullish bars, I still respected the downtrend. I still was thinking that we may eventually get at least attempt for price to push and create new extreme because I'm following the trend line rule. But overshoot combined with the trading range rules, notice price bounce at the support, big strong push above EMA indicating probably a change of momentum. So after price kept pushing higher and there was no push below EMA, after such a strong spike, this is where you have to adapt and you have to now switch gears. At first I drew a channel like this. I was looking at the spike and a channel. After we had massive overshoot, I deleted it and I treated this as a first bullish lag, little correction, and a second bullish leg. You guys can see this is the measured move. Market likes to move in pairs of twos. Measured move almost to the very tick, and notice where we bounce almost at the highs of the trading range. You don't have to be perfect. Close is close enough. So this uptrend is over with the break, new extreme. We're at the highs, and a strong push below EMA is indicating that the price may reverse, and we actually have a lower high that I forgot to mark. When I was watching this, I was still playing a little bit safe. I was expecting to get reversal pattern, but this lower high is a great signal bar, and it closed right at the EMA. And when the lower high closes right at the EMA like this, these are my favorite setups. They're really great when it comes to lower highs, because you don't want to see lower high pushing too far down. This is right at the EMA, great bullish bar. 2 legs up, uptrend played out with the break in new extreme, strong push below EMA confirming the bearish momentum, and we're coming from the range high, so we're heading most likely all the way down to these lows. There is no other way for us to get in. There's no second entry short. Felt second entry long is too far down, so you unfortunately have to watch this go without you, and you would have had fantastic runner. Notice price founding support at the lows of the trading range. So this is how simple price action works. This is nothing complicated. You're just following the simple price action rules. Price push higher, new low form, first entry short, pull back, second entry short. When I was watching this, I was thinking that we may get felt second entry short above EMA, because we're coming from the lows, and this is the bigger pattern. So I expect for price to go all the way down from here to go all the way up to here, because this is right now a healthy trading range. There is no imbalance. This is clearly a healthy trading range. But second entry short managed to push below EMA, and a felt second entry short didn't close above EMA. It was still below. So once price pushed higher instead of reverse down, it gave you nice lower high. You still expect at least attempt for price to create new low of this downtrend. You guys can see big bearish bar, lower high confirming the 2-legged pullback, second entry short. You're once again right at the key entry point, right at the EMA. Great high probability setup. Price didn't manage to create new low, and that's normal because the range, the bigger pattern is coming into play. Price pushed strongly above EMA and gave you a high low setup. Now I only marked it, had the signal bar been a little bit smaller from educational purposes, so you guys understand what's going on here, because you're combining the range rules, the range structure, failed breakout, you're coming from failed breakout, so this is a confirmation of failed breakout, support is holding, EMA is holding price, big bullish bar, showing momentum. It is just a little bit too big, and unfortunately you don't get no reversal pattern, because you want to see reversal pattern, which is a failed second entry short. Unfortunately it moved all the way up to here, and there is no way to get the reversal pattern. Now as I'm watching this, I don't have any other uptrend. I'm sticking to my short-term trend lines because I want to follow the trading range rules, and that means that most trend lines are going to be tight. Price created a break, new extreme. Once I see new extreme and I'm looking at the chart like this, I expect for price to give me a failed second entry long, and it didn't happen. Price created a second entry long that worked higher, but the signal bar is bad. It closed below EMA. Only after that point, I realized that there may be probably a wider channel like this. After we have a break in a new extreme, then I for sure can expect to get the failed second entry long, and price created a new high, first entry long, pull back, second entry long, failure. But this failed second entry long is above the exponential moving average. So now I have, from this perspective, break a new high, indicating that uptrend is over. I have quite a decent push below EMA, but now we push back up, and I can't take this failed second entry long that is above EMA. You guys can see I'm drawing the shortened trend lines. There's a break, new low form, and price strongly pushed higher. So this is a very confusing area because it is just bullish structure, but it's working higher oddly. There is really no good way to take any entry. Once again, you have another break, another new high, but price keeps pushing higher, and now price created a new high, and you have a second entry long here, but you're close to this resistance. You're coming from the resistance, so you're following the trading range rules just like you did here, you did here, you did here. This is nothing complicated. Always go back and try to take into consideration what is the structure, so you don't make an error, so you don't force entry. So even though there's a second entry long, the short-term downtrend is in play, and I need to see the short-term downtrends play out as well, at least corrections. I need to see a break and at least attempt to create new extreme. EMA can hold, I want at least attempt. Price created 2 additional legs to new extreme, strong push below EMA, and now I'm expecting to get the failed second entry long, new high form, first entry long, pullback, second entry long, failure. Reverse the pattern, uptrend played out, you're coming from range highs. Once again, you're expecting for price to go all the way down to here. Only thing here, why I'm not marking it as a high probability setup, look how stacked this is. 1, 2, 3, 4, 5, 6, 7 bars, EMA in the middle of these bars, congested. I really wanted to take this entry. This is such a great bearish bar. Context is great for this failed second entry long. Uptrend played out, you're coming from range highs. It is just a little bit too stacked and you have to be careful. Eventually price created last leg up, corrected lower. No clear entry right here. I was leaning towards short entries because this downtrend needed to get a new extreme. Notice this downtrend is working lower. You're coming from failed breakout. You're already in the middle of trading range, so expect for price to go all the way down to the bottom. Second entry short form horrible bar, stacked, congested, double trap above EMA now, stacked again, congested again, no clear entry. And only after price push higher here, you can find that there is a bigger pattern working higher. Because now we have bullish imbalance in the market. We can see that so far, price has been trending up, down fully from the lows to the highs. But here, price is failing to reach the support of the trading range. There is a room at the bottom of this trading range. That means there's a bullish imbalance and the breakout may work. This channel is very, very wide. Personally, I didn't fully trust this channel until we got somewhere around here. I was still focusing on the shorter term trend lines, but I cannot ignore after EMA holding price for so long that this channel is coming into play. So I took this channel into consideration after we were somewhere around here, because initially when I'm watching this is very flat and broad channel for ranges, and these are just not typically reliable. But this was one of those cases where the imbalance was so strong that this bigger channel came into play. Notice price is breaking higher. We're not fading the breakout. Why? Because bullish imbalance is present and breakout will eventually work. We have a second entry long two-legged pullback, which is a high probability setup at the key entry point. It is at the key entry point. It is with the direction of a trend. It is, but we have shortened downtrend in play. And I cannot cherry pick. This downtrend needs to get new extreme. This is not a high probability setup, because notice what can happen. You have a new high, first entry long, second entry long, failed. Because you have a shortened downtrend in play and signal bar is bad. You cannot take this entry. You have a new high here, first entry long, second entry long, failed. What would stop you from taking this failed second entry long? Here as well, new high, first entry long, second entry long, failed. We draw the short-term trend lines for a reason. You can increase your win percentage so much if you just respect the short-term trend lines and you're not being too impatient. So there's a short-term downtrend again, created a little break, new extreme, and price created a first entry short, pullback, second entry short, failure. Second entry short goes against the trend, so that's going to be a trap. If it's going to be a trap, then this is a high probability setup. Notice this big bullish bar, EMA keeps holding price, failed second entry short, bullish structure. Also, we can treat it as a micro new high, first entry long, pullback, second entry long. Double top resets the count, but it is there, first entry long, pullback, second entry. This was my second trade for the day, and you guys can see I was sitting here the entire time, took this trade right here, sat here for hours and just to take this trade right here. But it's all you need. You don't need to take a lot of trades during the day. You just need to take those trades that you feel comfortable with, that you know that you're reading price action correctly, and when you're unsure, you just sit on your hands because you don't want to be guessing and taking impulsive entries. Market kept pushing higher, drawing these short-term trend lines because I want to stay on the right side of the market. Little overshoot leads to break of a trend line or straight up reversal. Price is breaking the channel and reversing, and created a high-low entry. Now this would have been a green bar high probability setup had the signal bar been better. This is a doji bar, slightly below EMA at the level of EMA. Not the great entry, but price pushed strongly above EMA, confirming the bullish momentum and gave you a high low. And notice how many people are going to get trapped going short below this big bearish bar in a bullish structure, bullish uptrend, right into EMA. You know where they're probably going to get trapped, but the signal bar is just really, really bad. Short-term downtrend followed by a break, new extreme, and price continue pushing lower. Now, as price is still working to the upside, I'm thinking about potential failed second entry short above EMA, but price is failing to give me a failed second entry short above EMA. In fact, second entry shorts are closing below EMA and they're working lower. Now, we had 3 second entry shorts right here. I only marked this one because this right here will help you just set up the trend line and you're still inside of this channel. So I'm still expecting for price to keep pushing higher because I'm sticking with the overall bias. I'm not really counter trading. I don't want to break the rules. This is clear bullish structure. I'm sticking with longs. So price is pushing lower. That's okay. I'm not really too bothered. Then this second entry short now confirmed 2 key entry points, and bigger patterns can have larger corrections. So it is reasonable for me to take into consideration that this is just such a tiny break. We most likely will not get new extreme just straight away. If we do, then that's preferred, but we may not. So I mark this, but overall, personally, I'm just staying away from this, because if I zoom in like this, what is the overall bias? Overall bias is clear bullish uptrend. Bigger pattern is taking precedence, and notice price eventually keeps pushing higher and creating new extremes. So you have to ask yourself, how I put odds on my side. You put your odds on your side if you stick with the trend, and you can catch massive runners if you are riding with the trend. I'm personally not going to be trying to take these short entries, even though the key entry point is really nice and is holding perfectly and it's most likely going to work. Why bother with this? Because the next time you will do this, it may fail, and it will be so obvious why it failed, because the bigger pattern still needed a new high. So this is a little bit more advanced. These short entries are more advanced. Here we have another short entry of 2 key entry points, big bearish bar, very tempting. You probably know that it's going to work, but I can easily mark it. It's not a bad entry by any means, but I prefer sticking with the overall bias. Price created overshoot that leads to a trendline break or possibly reversal. Notice it tested the resistance that now acts as a support. This is the breakout area. Price broke to the upside, came back, tested the key level, the breakout area. So you're combining the key level with the overshoot. Price is pushing strongly higher. New low formed, first entry short, pullback, second entry short, failure, big bullish bar above EMA, great reversal pattern. This is what you're expecting. I was expecting to get a failed second entry short like this the entire time here, and finally you get it after price tests the key level. You have an overshoot, and look at the gigantic run that you have been able to capitalize on. This is what you get if you stick with the trend. Great bullish bar. Don't worry about new low of the downtrend. Bigger pattern takes precedence. All right, and you have the overshoot. Price kept working higher. Strong momentum is now up. You expect to get new high for this bigger pattern, so you're sticking only with longs. Break of a channel. First entry long, pull back, second entry long, where at the key entry point, at the exponential moving average, high probability setup, a little bit stacked, a little bit aggressive. You can sneak in with the limit order to lower your risk. Stop loss goes one tick. Actually, stop loss goes one tick below this bar right here, because you have to put it below the entire swing. So your stop loss goes one tick below here, below the bearish bar. But it's a two-legged pullback, and you expect new extreme, not only for the bigger pattern, but for this tight channel as well. Then, once price broke here, I drew a spike in a channel, new low form, first entry short, second entry short, failure. You don't want to take high or low because this is a pure doji bar. Failed second entry short, unfortunately too big. It's coming off 2 key entry points. There's actually a micro break, but it's too big. You cannot enter all the way up to here. The risk is just so big. Your stop loss has to go below this bar right here. But from the context perspective, still bullish structure, still expect new high. Finally, price created new extreme for the bigger pattern. I'm going to draw double top. This is showing me a range-like structure. Strong push below EMA indicating bearish momentum. You get a failed second entry long, but it's not quite touching the EMA. I have to wait, break, and a new low of the downtrend, indicating the downtrend is over. Push above EMA, indicating bullish momentum. First entry short, pullback, second entry short. Not interested in second entry short because downtrend has a new low. We're above EMA, and we have failed second entry short. Great high probability setup and market created. Now push higher. I was expecting still for price to keep pushing higher. Actually, we turned down lower, break, new high. We actually have a decent second entry short here as well. Big bearish bar, first entry short, second entry short, uptrend played out with the break and new high, and at the same time we have a lower high right here because you expect new low for the downtrend. Price closed, so for that reason I just marked these entries because you don't want to be trading this late before the close. Another failed second entry short, uptrend is new high, and then a second entry long. So don't forget to zoom out, remind yourself the structure so you know what is the bias. Stick with the overall bias. It will really make your decision process easier because you're just basically waiting for longs. It's okay, it may take longer time for this correction to play out, but eventually price action will create the new high. 9 times out of 10, 8 or 9 times out of 10, the price action rules will work and price will create new high, and you can capitalize on the long entries on the way up. So I'm going to see you guys in the next one. Take care, everybody.